Okay, now let's get another view on the markets, and for that, and when it comes to portfolio construction in particular, Robert Talevski joins us now from Activus Investors, again from Melbourne. Robert, welcome. Welcome to the program. We hope you're staying safe there. Do you get the view or have the feeling that this is a bit of a tired market in the price action that we've seen as of late?
Well, there's probably two ways of looking at it. I mean, on one hand, obviously, markets have rallied very, very strongly, since the April lows, and we've had sort of gone through some of the biggest numbers in history in terms of rally. But at the same time, there's plenty out there to keep sort of equity markets, rallying. Obviously, the stimulus that's been going through sort of the economy, and we've seen that sort of, go through and supported equity markets, I guess you could sort of say, in the last few months. But at the same time, so my view is, as obviously with rallies, if you look at history, strong rallies like this are always, there's always a risk of a pullback in equity market returns. So you have to sort of be mindful of that. But if we sort of start looking 6-12 months from here, our view is that equity markets are in a pretty good position. And then if you look at it from a relative perspective as well, I think it's important to say, well, relative to other asset classes, how will equities perform? Well, my view is equity markets should do better than most of the mainstream asset classes, including bonds. So in a sense, you could probably say that's probably another thing. I mean, from our point of view, from a portfolio.
So from a portfolio construction, I think that was what you were just going to say. Is there such a thing as over-diversification?
Absolutely. And particularly, I mean, the levels that we look at, both from an asset allocation perspective and a manager selection perspective. Firstly, on the asset allocation part, you could obviously have too many sectors or too many asset classes or exposure to those particular asset classes when, some of those asset classes, if they're not going to, in our view, if they're not going to be performing well over the next period of time, there's really no point having them. Or the other risk is having, way too many investment managers in your portfolio. And then, you're sort of taking away, if you like, your alpha from one end and sort of, unfortunately, that sort of might sort of have an impact on your return. So, there's always such a thing as, diversification is important, obviously, but there's also a risk of being over-diversified as well.
Robert, we've received a lot of information recently. A lot of things are changing. Are you changing the construction of your portfolio there to go and try and capitalise on opportunities that lie ahead?
So at the moment, we're not making any changes. We made quite a few changes over the last couple of months. So in terms of equity exposure, we're keeping it where it is. We're starting to divert more attention to, I guess, the sort of what's going to protect the portfolio should we see another sort of downturn in markets. So that's very important. I guess, it's the same time, I guess it takes us back to what it was like in January where markets were still rallying, but, we sort of had that view of, being a little bit cautious when markets are rallying so much. And on the other hand, obviously in March and April when markets, got hit pretty hard, our view was to sort of look at, putting money back in the market as well. There's also, given this high divergence of returns, so what that basically means is, you could see a big difference in returns between asset classes. I think that's important to sort of think about it from a point of view of having active management, in the portfolio, given that, they can potentially avoid some of the companies that will struggle, going forward as well. But at the same time, keeping that sort of all-weather component in your portfolios, both having something in your portfolio that will generate returns, obviously, as markets keep rallying, but at the same time, should markets get hit, also having some of that sort of downside protection as well. The thing that does concern me at the moment, probably A-REITs to some extent, and within A-REITs, it's more the commercial office sector, as you've been talking about that whole sort of issue around social distancing and office space being sort of put on on hold, I suppose, especially in Melbourne and Victoria. That's sort of something that's really on our minds at the moment, and something to sort of to play out in terms of that sort of impact on the big commercial office space sector.
Robert, we've seen the start of US reporting season this week. We saw a raft of banks come out last night. Is there anything you can take away from what they said and apply it to what we might see from Australia's banks?
It's probably too early, I'd say, at this stage. I mean, there's only been a couple of banks that sort of came out. I mean, obviously, by virtue of the fact that the numbers at overnight Wall Street came through reasonably positive, I guess. But there's a lot of, it's going to be very messy, I suppose, in the next couple of weeks. So, it's really difficult. But I think the key thing here to look at is not so much what's happened in the past. Obviously, the numbers are going to be, pretty messy. It's more about trying to sort of pinpoint, what can you sort of take out, any sort of little bit of, guidance as to what might happen going forward. I've sort of mentioned this to you on your show before, talk about sort of this idea of a lot of companies have been writing down quite sort of aggressively in this sort of anticipation of, when you write down aggressively initially, and then as we come out into sort of Q4, those numbers might be, their earnings might be a little bit better than normal. So maybe that's something that sort of look out for, sort of those write-downs in the current earnings season.
Robert, been very generous with your time this morning. Stay safe down there in Melbourne, and we'll do it all again next week.
My pleasure. Thanks, Daniel.